Well, good evening. Ira Epstein, and what an eventful day. My gosh. I got up as I usually do around 4 in the morning, and I'm watching what's going on. And I said, I have a feeling you're going to still see the dollar strong, the gold market up today, a bit into the bonds, the stock market down as the tariffs are now in place and what will happen. And if you watched my morning video, I even said, President Trump gave everybody till Tuesday, which was 12:01 a.m. Central Time, to work out whatever he's going to work out. I mean, why did he give till Tuesday? Well, the reason is simple. Number one, he's trying to keep his word so that people believe him when he makes a threat or he says he's going to do something. On his campaign, he's going to put on tariffs. Recently, I'm hitting them with tariffs this week. You cannot argue the tariffs didn't go on. They went on to China, Mexico, and Canada. Did his word. But the Tuesday part was what had me irked. I'm going, why Tuesday? And over the weekend, I know what I said in my update, and I told my clients, I said, hey, he's giving people time to work behind the scenes, and they're going to have to do something, otherwise those tariffs are there. And that's exactly what happened today. So as we looked at the markets, we saw that the tariffs were in fact put on, and we saw that the scramble went on. And lo and behold, about 10 in the morning, you saw that, I think it was around 10, Ms. Scheinbaum had a deal with Trump, and then you knew what was going to happen later on. Later on, you knew that Trudeau who's played a hardball as best as he can. He has nothing to gain by that. He's not going to be premier again at this point in time. All he had to do is sit back and make some phone calls, and they did it. So the deals that the U.S. got out of this are simple. Number one, more surveillance on the borders, both north and south, to stop fentanyl from coming across and illegal immigration. Got it? 10,000 troops will monitor, according to Trudeau, the northern border. New helicopters, new surveillance will be there, and it's all going to be monitored by the U.S. If they don't do as they say and they don't do it quick enough and click their heel, you're going to get hit. It's that simple, candidate. I assure you, if it stays for Trump, I'm positive of it, okay, because this could have been handled better, but it could have been handled better by both, I think, Trump and Trudeau. I think there's two ways to look at this, definitely. Scheinbaum played it different, and I'm sure the Mexicans are looking at America the same way the Canadians are, but she played it different. She called it Plan B the whole time, never said we're retaliating. They're planning whatever they got to plan, and she got this done 1, 2, 3. What neither did so far, so there's another shoe going to drop, is you didn't hear one word today about the trade deficits with those countries. So this has been separated, de facto done by Trump. First things first, in his mind, is to how he made this negotiation. He's dealing with first the fentanyl, the immigration, and now it's not going to be at the end of 30 days. Now the pressure begins behind the scenes. What are you going to do for me on these trade deficits? How do we get this taken care of? I know you don't have to believe me, but it's exactly what's going on. While he was at this today, he said, I might as well go after Ukraine. We're sending nothing but money. We're doing all this. They're not doing well in this war. You know how he judges things. I'm not him, but it's pretty easy to be him, And what do they have that I want? Well, they got rare earth minerals. Today he says, you want our help? We want those rare earth minerals. Panama, didn't finish there. Marco Rubio goes there. Now every warship that goes through the Panama Canal goes through free, and they get a preference. They go to the head of the line to get through everything. Then Panama must break away from the Belt and Road, which they've agreed to do, and then further break away from China, which so far they're saying they'll do. I think all in all, a pretty successful day in the day of negotiation for President Trump. You may not like him, but again, it's not about him, it's about the results. And that's it. You're already seeing the Democrats up in arms over the power that Musk has, and who is he to be saying who should be fired and why does he get to see all these bills that are being paid, so on and so forth. The reason is simple. Trump wants it that way. And as long as he's in power, that's how it's going to be. So you'll hear all this, but this is called the politics. Now we can get back to some of the real work. You get the Red Book Group coming out with retail sales at 7:55. You're going to get U.S. factory orders for December at 9:30. The JOLTS report, the first of the big jobs numbers. Remember last month, I think we had, 8.098 million jobs being offered. That's going to come out at 9. The API numbers are coming out. OPEC met today. And OPEC said they're still on track. They think that they can produce more oil come the April timeframe. We'll see if they're right or wrong. It depends how the world economies are going. But why not keep it if I'm them? I wouldn't say today, oh, no, we're going to pull back from that. They don't have to. We think we're on track, and they said the right thing. That's an overhang on the oil price. San Francisco President Daley will speak, but we had a lot of Fed talk today. And if you get my full newsletters, they were covered there. And of course, the tariffs delayed, but I'm telling you, there's another event happening right now, and get used to it. That event's going to be, how do you go after right away and start this trade deficit and get that talked down or agreed to without tariffs? I don't know. Maybe they'll call it a tax, not a tariff. I don't know. They're going to have to figure something out because Trump isn't going to wait. He's already told you what he'll do. He's proven to be the same man of his word that he was before, and this is him at his prime. You do realize we're not a month into his presidency and how much has already happened. When you look at the S&P on a weekly basis, you're still over the 18-week average of closes, so the bias is still up. When we take a look at the chart, if you think you can trade this action, I applaud you. Then you're you are. Now, I don't mean this facetious. This is a pretty difficult move. If you look from the high to the low, and let me just walk you into this to give you an idea. On Friday, you were up at 61.47. Today, you hit 59.35. So that's only a 200-point swing in the S&P. And then you come back and look where you're at right now. You've got the pattern down. You got lower highs, lower lows. The market's sitting pretty much in the neutral zone. It fell back twice, back over here about 6 days ago, and today to the 100-day average and found support. Where are my friends, those Bollinger Bands? They're further away. They were not hit today. So this is a moving average game. What's the pattern right now? The swing line is bearish because you have lower highs, lower lows. The bias is up because the market's staying over the 18-day average of closes, and momentum is working its way up and away, trying to break away from being overbought. A real difficult pattern. But what we have seen is that the near-term support is coming into the combination of the 18-day average down to here, but I'm not seeing an uptrend at work. The same things at work in the NASDAQ. You have the lower highs, you have the lower lows. The market came back and is fighting a battle right here, but you made a shift today. Now I can make an argument that there's higher lows because tonight's high is already taken out, the high of Monday, and lower highs. So you're narrowing in like that. All happening against, how many times have you hit the 18-day averages recently? Don't be surprised you wake up in the morning and you've hit that 18-day average. You're over it tonight, but I wouldn't be surprised. When we take a look at the Dow, the opposite. Since it didn't have really a lot of high tech built into it, it's been staying over the 18-day average, and it fell back on the break today to the 18, but held it. Now, keep your eye here. You're still embedded. So the pros were probably buying today, and they want to kick this market out. If you lose the red line under 79, I think the pros just walk away for a little bit. I didn't say there's a downside target because you're already on top of it. The weakest of the markets remains and has been the Russell, but it too had a pretty interesting day. Let's go back here, you and I, and just see if we can get it. And there we go, to Friday. So on Friday, you have lower highs, lower lows, but you're over the 18-day average. So the first support in the market is right here. 2282. If it gives ground, the next level is the 200-day average, then the Bollinger Band. The market's in overbought territory. There's nothing here that's bullish on the market. The market drops today like a rock off the tariff news, of course, that hit Saturday, not Friday, carries the market into that support, and you tell me where you're back to, right at the 18-day average. I think the pros are selling this market short, with stops over this high, looking to see if they can drop it back there over time. In the note market, you have fallen back to the support of the 18-day average. The trend is down, the bias is neutral, and you're working off an overbought condition. But this market's not getting a solid bid. The 2-year was, in fact, the market that was down all day, where it was the back end that was losing yield in the 30-year. When you look at the dollar index, look at how this market lifted. I would have loved for it to gone back to the upper Bollinger Band, but I think the market is saying enough's enough for the near term, and it might want to play a game at the 18-day average of closes. Again, all the news came out of the market now, so now we have to wait and see how this market wants to finish itself as we get the evening trade. In the eurocurrency, lower highs, lower lows, resistance on rally should be the 103.80 level. However, the risk is so large, I don't know that you're going to get short selling on this pattern. And the reason is, let's assume you went short 103.82, the 18-day average. Do you really want to risk $1,000 and put the stop over 104.89.5? I think you need better patterns to work from. The trend is down, the bias is down, but I don't think you're going to track money on that. The British pound fell right back to the neutral zone today. It is still a market that is very overbought. February 6th, today's the 3rd, we're going to get what the Bank of England wants to do. Any close under the 18-day average reinserts, at this point in time, at least, the bearishness. But if you were to get over 124.75 on the chart, you negate this bearishness and you have a big nothing chart with resistance back at 125.50. When we look at Bitcoin, the one thing you know that I teach you here that I believe in are what the Bollinger Band do, especially when they're first hit. So here's the market, and obviously nobody knows yet because this is Friday's close. The tariffs are supposed to hit. Will they be negotiated? Will something happen? Well, as it turns out, Trump announces the tariffs, and when the markets, and this market trades right on through, not futures, but the cash market trades 24 hours a day. And I watched it over the weekend. As Sunday night, I was putting out my update for my subscribers, and I said, we're down pretty hard. Well, you went to the lower Bollinger Band. Look how you came back in the market, and that's about where you're trading right now. Again, you're still into the downside momentum, but you've already hit these targets. You have found your support. I think that's going to be your near-term trade bottom for a bit. If I'm wrong, you open up the door to all this, but we'll see if I'm right or wrong. You got to prove that that is, in fact, the case to me. Then on the energy markets, they still look bearish. I mean, if OPEC is talking that they want to put more oil on the market, they're getting this from President Trump. Drill, baby, drill. Put that oil out there. Drop these prices down. And you're down to the 200-day average. That's your first big support area. If you can't hold this zone, then you open the door up for the 7,500 level, the lower Bollinger Band. There is no trend at work in WTI. The rally today carried the market to the 18-day average, my neutral point, and the market stopped right there, fighting a battle at the 200-day average. I don't see a trend on that. I see an oversold market. I mean, I see downside bias, but not something that you could trade per se. And heating oil starting to slip away from the support at the 18-day average. It gives up a lot of ground. The next support's the combination of 25.30, the 200-day average, and the Bollinger Band at 232, let's call it 50, just for the sake of rounding it. You are in oversold territory, so it's very hard to try putting out new shorts. In addition, the swing line's pointing up. Last but not least on the hit parade, you came down to the 200-day average, found your support. Remember, a 200-day average is the closest thing that a big analyst that use moving averages would call their 1-year average, found its support there, came back up, and that's where the market's fighting its battle. So we'll see what's happened. And I do see from time to time analysts trying to come up with other moving averages, 15 days ones, whatever. Here's why those don't work for me. You want to be with what the crowd follows. That's the idea of catching trends when you can. You want to be with the herd, not fighting the herd. And I look at how some people try to find these oddball reasons why a market finds support where it's at. I've tried them. Not every one of them, obviously, but a lot of them. Most don't work. I'm giving you here some pretty good ideas of things you can hang a hat on at least for an understanding, and that's what it's about. Here's something else. You hear me talk about guide to technical indicators. Let me step back here for just a minute with it. And as you could see, we've put together these indicator patterns on 2 volumes for you. Color, written up, explains what's all been done. I think these are the best ones you're going to find out there. And believe me, I read Investopedia. I read all these different ones that come out, the new books and so on. I think this really covers it in a way that you can see, laid out in a way that you're going to understand. It's free. It's part of our trading kit if you want. So all you need to do is go onto our website at iraepstein.com and take a look right away at that. And when you see that, you're going to see and go, whoa, wait a minute here. This is free. I can get it. I can learn some of the techniques. I got some free courses of pivot points, the Aruna indicator there. Yeah. Go to iraepstein.com, free offers. That's where it's at. Or you can move your cursor up here, give it a click, and it'll take you right there anyways. I'm Ira. Thanks for listening. Thanks for watching, and I'll catch up.